What's up, guys? I'm Seb from FX Cartel. If you're here, you're probably interested in the trading market and specifically the Forex market, and you're in the right place because I've got 10 years of experience and a successful proven strategy. And I'm doing this video for you today to help you develop and improve your skills with my latest tips and tricks on the market.
All right, let's have a look at what we've got now coming. So we see some downside on the back of BOE, and surprisingly we haven't breached the trend line there. We haven't tapped into the buy area, which would have been nice for longer term upside in terms of tech. What we're expecting this week, it's relatively quiet apart from the end of the week, where we do have some GDP, which is set to be lower and going down, so we are expecting some bearishness coming. So my view on the week is slightly more bearish, and therefore we could end up into the lower buy area. That would make us lose the runner, but that's okay. With this strategy, I do tend to lose my runner like probably 8 to 9 times out of 10. This is how it works. So when we get one, it usually runs for a while and helps. So when you know the statistics works in your favor this way, you shouldn't mind them too much being lost like a lot very often. So if I do lose this, it means I'm likely to go into a buy area, so I'm happy with that. So my view will be slightly bearish based on the fundamentals that we've got GDP going lower, and maybe we're gonna price that in because we haven't gone very low, and there's lower possibilities on tech, which is backed up by funda basically. So on back of this, this obviously is my main buy area. We've lost the trendline confluence, but this is still a nice buy. For me, this would be slightly too aggressive to go with that buy again. I know we've moved quite significantly, but with what's coming, I'd rather pass on this. It's a possibility, but I wouldn't go for it. Upside, if we have to have some upside, what we are looking at, so upside wise, we've got this, like you've seen, I broke it down before, a shitload of confluence there for upside. So definitely if you go into this area there is some short potential, even though we are going against the fundamental. Some profit taking will be there. The tricky situation in this area is that there is no accurate spot price for short. So we're gonna go, so this is my main short area, so we're gonna go on the next one, and then we're gonna focus a bit more on this one. Next one, very simply, I'm looking at the break retest of this area. This did occur, that was a very small kind of break retest, 70, so I'm expecting maybe some more for it. And if you check the fib, we do have the 61 as well. So if you're looking into this area, we've got this wick there, and then you've got the 61, and it's close to the 160 big round number, psychological level 16000. So I do have an interest there, especially if we see a quite straightforward push to it now, because we've had a reaction on the 38 and this area. So this trade that I didn't capitalize on. So 61 will be next. I will pass on the 50. If we breach 50, then 61 is of interest, and then you've got this week before, so I don't want to wait for the sake of 30 pips. 61 for a reaction. I'm gonna go with this week there at the 0.49. So that is my next zone of interest. There, we had 61, and you know what? the zone should be probably taking 60 as well. It is a big zone, I agree, it's almost 50. But we do think there is fundamental driver to push the price down. So if we are to see some upside on the opening and tap into this, generally think we are looking good tech and wise to come there, and therefore maybe if we get this, I'll give it a small counter on this low there before hoping to get into the bigger reversal there. So this, if you get that, that will be perfect, a good case scenario. Those one I'd like to see is a reaction there, not necessarily a lot of downside, but then come back into my big short area, and I don't know, I have some longer term downside because there's an awful lot of reason for a short there. So we shall see how we unfold. So this is the next area of interest, and obviously the next after that is this big area. And as I was saying, we kept moving because the confluence are dynamic. These are dynamic confluence, they evolve over time. And with the way we move to the downside now, and the volatility, if we got some good volatility on the way back up, having so many confluences to back it up, I'm not gonna wait for EMA now, and I'm gonna base it on the top of these. So we've got a 0.8 confluence, so I'm gonna cover the 0.8, and therefore my next interest will be on that week. So we got this small zone there, and then we have, then I'll have to see how we react, but it's a bit too close. I'm gonna have to see how I do. So to explain to you, on my personal account, that's gonna be easy. I'm gonna scale in, so which means I'm gonna cover the whole zone. I'm gonna have different level covered with different entries. As we go deeper, it gets bigger. I can't do that with this challenge for obvious reason, because we are being aggressive. And if I imagine taking the first entry 25% doesn't work out, I'll go to the next one. If I get bigger, well, I don't have much of a room for getting this right. So I think what I'll do is I'll aim for the first entry, cover for this one, and then I'll have another one there, and I'll cover for it, and have two separate trades. I would never do that on personal, because the likelihood of having this to just go through the first one and tap into the second one to come back into the first one and make some profit is taking an unnecessary loss for something that's got a load of odd of success, and therefore this is not the way I'll do it. But it's purely just to show what's happening. I might, you know what, I might smash half of the account just trying to make this one work, but that's what we're here for. See the potential of this strategy, and with aggressive, I'd like really to showcase the reality of being aggressive with trading. You know, it's not always nice, it's not always working your way. You can make some really good result, but some week can be very savage. So we'll see. So like this, what I'm gonna do, I'm gonna move this to the bottom of our zone there. This is just to cover the 0.8, and I'm gonna have to cover this week, so I'm gonna have to cover this way, 0.5, and target wise, I think target wise we're gonna check if we were to tap into around 323. We've got that before. It's still looking decent, so I'm gonna stick with it. It still does potentially work out, and yeah, I'll have to have a backup trade. So this is something I'm gonna have to be actually actively involved What does it mean? It means I need to day trade this area. I need to be in front of the screen, which I will have to do. So I've got some room, you know, it's not gonna happen likely within the opening, and I'll try to see how we trade this if we have to take a loss on the setup, basically. And yeah, that's about it for the week coming. So we catch up on later in the week to see how things are unfolding. So our area there, first zone of interest, has been missed. We've done more than I would have taken on this area, so it is a missed, and I have now lost interest in the zone. It could still work and tap later in the day to the zone. Our typical kind of move is possible, but one thing I do tend to not do is trade against the momentum on Monday, and we've seen some upside, so we could see some upside further during that day. We could not potentially capitalize on the thing if the momentum is against us. So I generally don't like to trade Monday. Statistic over the years have told me that most of my losses occurred on Monday, so I'm not interested to take this one now, as it's a clear miss. Not by much, but that's just the way it is. Frustration should not take over, and we should keep focus on and move on to the next one. So my two next trades are the potential buy there and the current sell. So I'm gonna have to see. If I had something, I would have gone for it, but I do not have anything there, so I'm unlikely going to go with that buy, and I'm gonna wait to see how we are there, because I might be taking the buy on this week rather than this one. Let's see. I want to see the price action. This is going to be dependent on price action and what we do Monday, so I'll update on where we're at next, or if we have anything of interest before, and we catch up next. Alright, so we've seen strong reaction in our area that we were looking at, and as we were looking at the possibility to go again further into the zone and make the pullback, this is what occurred. So this was not capitalized on, unfortunately, and unfolded the way we kind of planned for it, but that's just the way it is. What I'm going to do now, because we have GDP coming tomorrow, now that we've made the high reference and we still have this zone of interest, that zone has worked. Yes, it worked based on the tech without fundamental. Now I've got fundamental coming, and so what I'll be doing is I'm gonna use the runner we've got from the 166 area there, and we're gonna use it to take this counter from this area. I wanted to counter from higher up initially, but now that I've got the fundamental that could be coming my way, I'm gonna try leverage the runner to take this counter for one simple reason. If I am right and I do not use this counter, basically GDP, negative GDP will tank the pound and therefore will wipe my runner. So I would not necessarily go on a zone that I've worked again and I haven't used the runner first time round. But now that we've got the fundamental coming tomorrow and it's looking to be against my runner, why would I not use it instead of wasting it? If I'm wrong and if I come up positive, then it's been used and it's lost. That's no big deal. I might even have time if the results are completely off and it's not actually negative. I might have time to cancel this counter and maybe save a runner for the short term. Okay, so this is the play I'm looking at to come next, and we shall see if there's anything that changed. But normally GDP is said to be negative. We've got this area, we've got this one, so this one is risk-free, and if this is matched, if this one is matched, it gives a high odds of success for this one, and therefore it's a win-win the way I see it. If it doesn't tag us and goes down, then I'm just gonna lose the runner, and there's that. It would be stronger enough of a move there to have profit-taking reaction anyway. So this would build me another trade and another runner, and that will be slightly bigger now. We catch up when the news, or unlikely on the news, but the aftermath of the news, and see the end of the week, first week of Feb has gone, basically. Catch up later, guys. Hi guys, so let's take a look at the week. So what happened is that we finally had our GDP release, and it was even worse, as you can see, as expected. So the year-on-year was same, but the month-on-month was going lower. So in the current state of the economy, this is this is not looking good with the inflation so high. So we want the GDP to match the kind of inflation. So this has been causing a lot of downside, and as a result we capitalize from the counter. So it made overall a move of 200 pips with a bit of slippage on this one, which is always nice to have our way. And as a result we haven't lost our runner, and the first counter has worked. So you notice that I don't leave runner from counter. Sometimes I do, but to leave a runner from a counter, for me, it'll have to be a runner that is significant in size, and because we are so close still to take a significant size counter, that it's not worth it. I'll start taking counter size that are significant past this high then, and therefore in each counter I take, so which means it's a trade that I'm gonna take using the profit running from this small position. Then I'm gonna start leaving a runner. It starts getting messy, but it's actually way easier than you think. You just need to practice it. In theory it doesn't change anything, it's the same as trading normally. You don't do anything specific to your trading. It's just I like to see running profit to take a position. It's for me an edge psychologically. Basically, it's a psychological edge. I've got to take maybe a more aggressive trade, and therefore knowing that I'm covered if it doesn't work out my way. And this ends up taking play without the fear, and therefore being more efficient on my trading, basically. So what we have this week, we do have earlier on in the week, we've just got the unemployment early in the week, so on Tuesday, and this is set to be unchanged, so I don't expect much from it. And we do have, however, on Wednesday some PPI, CPI and PPI, and they are expecting to go slightly lower. So now, technically speaking, CPI, if you do get some CPI, as for you, as I'm showing you there, we normally, with positive CPI for a currency, it means that the economy is growing, and it's a positive thing. Now we are in a state of almost hyperinflation. What that means, it means that we need to see this figure going down. Okay, so to see this figure going down, it means that we are getting the inflation back into control, and this is seen as positive for investors. So this is the only time when we go too far out on the inflation, that when it starts lowering, it's a positive sign, and it's getting toward that it's slightly going down from 10.5 to 10.3. So if it's going down, or even if it's going even lower, then we shall see some upside on the pound complex. Now, quick one for you. This is coming Tuesday, Wednesday, so a lot of news coming for the week. What that means, it means it's being what we are looking at, it's positive. So what you can start doing is pricing this in. So what I'm expecting to see this week is we're gonna tap into this sell area, ideally after a news for profit taking, because the perception of the week is that it's going to be pound positive, and therefore we might see that being priced in, and we might see our typical pound bullish pattern. Basically what it is bullish Monday, bullish Tuesday, then bearish on the Wednesday. Thursday tend to pick up back to the high it's made on Tuesday, and Friday usually gives another go, and then we've got some more downside. But the main thing is that if Monday is bullish, very often Tuesday is bullish. So what I want you to get, that if we do have some bullishness Monday, is we're not trying to counter this, we're not trying to get or go against that momentum. That's the main thing I got from my trading. Don't go against the momentum on Monday. Okay, it doesn't matter what you think, it's the market perception, and what the market perception is, it dictates the market. So it doesn't matter what you know, what you think, what you want, it's what the market decides, and its perception is king, basically. So based on that, if we were to see lower, I'm interested in this area. Why sooner than this? I see some upside down, I see some upside, I'm gonna get it right. I see some upside potential for the whole week. So if we were to see this occur, which I doubt we will, but if you were to see, I'd like to ride this and have some more position, take the counter. Otherwise, I see nothing in between in this area there. So guys, here, there is nothing. So there is absolutely no trade to be taken there. This is the first one I'm gonna go for, and this is likely going to be the second one before I think we see some stability. It's currently 300 pips away. This is likely something typical for a bullish pricing in of some of these news. So we'll see how that is. Everything has been planned, so nothing has really changed for me. And yeah, I will maybe do a quick see on where we're at after Monday and go from there, guys. Alright guys, so we are not too far away from the short area. We've seen a massive push today on the pound pair. So GT's seen over 250 pips move across the whole pound market. We've seen this move. It's a very bullish start of the week. It's likely to carry on Tuesday. What does that do to my area? Well, if anything, it makes it a little bit more of odd of success. Why? Because the odds of success have lowered down as we've tested it, no doubt. But the sudden push we've had is making it slightly better, and this is because we are now adding the profit-taking confluence. So what is profit-taking confluence? Earlier on my journey, and a lot of traders are still in this journey, I'd see a big push toward the zone of interest like this, and I'll be shooting myself and just removing my order or cancelling the trade, and I would see it working. So now, if you're trying to figure out what's happening, what is happening here? We have establishment traders that are obviously buying the pound against the yen in a very heavy fashion. So they do have a lot of money involved to make this push, which means they are making a lot of money. The profit is huge. If you're seeing a zone like this and you're running huge profit quite fast, what you tend to see is not want to lose any of that profit or want to secure it fast, and therefore it makes you more likely to take some of your profit or most of your profit out on level like this, which is what caused the momentum reversal. And this is why I add this as part of my strategy as a half confluence. So this is this big push on Monday is actually helping me out in this zone basically. So usually typical bullish pattern we see is bullish Monday, Tuesday, and therefore a Wednesday reversal. So ideally I want this to stop because it's past US time, so it should slow down, resume tomorrow morning, and then late on Tuesday kick in this area. That'll be ideal. What's gonna happen is if we do breach this area Tuesday, I'm gonna have to go again wherever we are around the 4 o'clock, because then the odds of success for the reversal area above this is even higher, and I can't pass on this. So we'll see what happens by tomorrow, and yeah, catch up on this sudden move. So as I was saying yesterday, we did tap into our area and it did match the perfect timing for me, which is aligning this level with the 4 p.m. confluence. So 4 p.m. is a confluence because it's the double open session, so US and Europe, so London, which means there is more liquidity involved and more likely to see my reversal happening. Also, London closing the position, maybe US jumping on the same trade, and therefore making this whole trade basically more likely. So what now I'm gonna do is I'm gonna let it unfold, because this is pretty much the best case scenario. Monday, Tuesday push toward Tuesday 4 p.m. Can't have that better than this. It's reducing my drawdown potential because it's the best timing, and now it's one of them where it either works or it doesn't work, but it shouldn't mess around the whole rest of the day. So I bet by tomorrow this is done and dusted, and you should see potentially some more upside coming by the end of Wednesday to come back for a bigger reversal Friday maybe. So we'll see where we can place ourselves for Friday. If it's not happening this way, I'm just gonna keep a small position there. So I've put a small runner in on top of the position we've got, so that my full position is gonna be closed, and I keep the 0.1 runner active. And if we see further potential to the downside, which could still happen, we never know. At least now I've got double runner on both sides, and we can be a bit more, even more aggressive toward the GJ in the few days coming. So with the downside potential, if we were to see more downside, I think I will be looking at the first counter to be around this area. If you're looking at the recent push, 38 is a big ask. We'll see, maybe 38 or 50, but I'll be more tempted to go with the 50 because we've got more key level to back it up. 38 might be a bit light and therefore see too much runner, which would just cost me more runner before it actually works. So this is the way I see it. Let's see tomorrow what brings and where this trade goes basically.
Hope you're ready for this shit.
So we're back on the charts, and we have seen some upside this week on GJ, and we're going toward our next area for potential short. So what has happened? I personally gone for this area for short using some of my runner from the long, because I've got several one, and the first one has been stopped out, so I've lost some of his runner. I haven't gone for this one in in this aggressive trading account, because this was a very aggressive short, you know, but based on this area there, that was just the 50 fib of the whole move. Just a quick reminder for you guys, you know, this 50 fib there, and that confluence has now been breached, as have all these EMA, which have now piqued my interest for this zone, because it's at reinforced odd of success. So why is that? Any confluence we breach on a technical environment like this week, you are just making the next set of confluence a bit stronger. So initially, this is the way I had that zone marked up, if you remember. The EMA with the previous rejection there, that key level. However, now that our SMA has moved significantly lower, I got to treat these slightly separately. Why? Because if I didn't, I would have to cover such a big area, almost 100 pips, where I barely have 100 pips to give for the potential of this trade, the way I'm seeing it. Therefore, it doesn't really make sense. But it's also the recent price action there that is dictating the fact that I can more or less treat these as two separate trades. First of all, the distance is reasonable between the two, and because the previous confluence have been breached, so they are reinforcing the order of success for the first one. So I don't need to go for something massive. I've just set this as SMA being the next entry for me, and just a set of 45 pips for the stop. So I'm gonna go for 1-to-1 on a 2/3 of the trade, and 1/3 I'm just gonna target just before 23 and this big set of broken confluence in case we get a break retest and some further upside. If we do, I'll see if we go for it, but I'm likely to go for again the top of the box area we had originally, and this is the top wick there, because it would make sense as well, because we are trading the technical environment. So at the moment, I'm just relying on the fact that this breach on a Tuesday is likely to be causing the next one to have some odd of success and some slight pullback, because the pound market is aligning, the timing is getting almost good toward the 1 p.m. Tuesday, and because we still have a runner as well, so a lot of our risk is offset by the runner we still have from there. So therefore, there's every reason to go for that specific trade. So I'll update once this is done, and we go from there, guys. Alright guys, we're back on the charts. Unfortunately, on this trade, I've just been tagged out and the move has been done. So this is very annoying, because my personal account has not been tagged out, and this for some reason has been tagged out by less than 0.2 pips, so very frustrating. So this is the first L we take, and it's a chunky one because we've lost overall 800 pounds and we back to 1800, so this is a big downside. We were almost triple the account size and we've just gone back to slightly less than double. So we will move on from there and surely make that back. But yeah, this is very unfortunate. The idea I had initially was to cover the whole thing. By being very aggressive and trying to maximize it, I didn't want to cover the whole thing, but my greed has made this little too tight and didn't pay, unfortunately, for this. So it's a reminder that we don't get the trade the way we want, we have to get the trade the way it is offered, and this was the zone I had of interest, and I should have covered the entire zone regardless of what I want from it. And therefore, this, guys, is a quick lesson on how not to intervene with a trade and analysis that we do based on emotion. and the emotion here being greed. Alright, so we'll move on from there. No L will stop us in our challenge, and we'll see what else is possible on this pair. So, as I was saying, the next area for me will be this one. Now, the way we reacted to the past few conferences there and there, we've had some strong reaction, so from experience, what we're likely to see is that this one could either give you the full reversal, which I doubt, based on few elements like not breaching this trend line, showing you some still possible uptrend. Actually, if we were to duplicate it as well, I'm moving it across as it is. Again, what I've just done, I've duplicated this trend line just to show the potential channel we are trading in, and clearly showing you that this should have been covered way higher. Anyway, I'm seeing less and less potential for this to give me a lot, seeing how over tested it has become now, and potentially a breach. It looks like we are looking to tag into this area in the near future. So I'm gonna go with this because it's a break retest level, and I've gone for all of the others, so I have to go for this one. I can't and not go for this. However, with this, you see the previous confluence is quite close, very, very close. And this doesn't need a lot to cover, like I was discussing before, so I'm gonna go with a 30-30 1-to-1 and see if we can grab that 30 quick and then move on to the next. Buy wise, I think if we were to not make any new high, I'd be very interested in going for this area there, the 50 fib. So the short there and this one are my two next trade of interest, basically. So I'm gonna set that up and we'll catch up to see what we can get. So from this trade, again, I wouldn't need, at the moment the way it is, I wouldn't need a lot to be covered. My personal account, I think I would cover the 61 just to be on the safe side, because this is the area, so cover the whole thing. For this, if I wanted to make it interested, I can't really cover the whole thing, so maybe it's not even a trade. So for this, I'm gonna hold on to the area. So it's definitely an area of interest, but I might need other element for me to get interested. This, we're gonna go for a quick 30-30 just to see if we can just recover and recoup this loss and then move on from there. So we are back and we are looking, I'm currently looking at the fact that we're breaching these confluences there, break retest area of this very used, overused maybe area there, which is like really doing fine trick there. So over tested. Now that we've made a significant break and we've had an awful lot of confluence, one thing you should know about GJ, 38 is the biggest confluence in terms of fib. So the best fib you can get. And we're currently near the 0.5 there. And we've made a significant move to the downside from this area here, like 200 pips. And I've got some buy potential on other pound pair. So this is very aggressive. Okay, this is very aggressive. I've highlighted the potential trade in my channel, and this is not something I would go myself personally. But we are being aggressive here, and we could be looking at taking this trade. Now, however, I know we said we'll be trading aggressive this account very aggressively in high risk fashion, but I do think there's an opportunity for us to take a smaller trade there to build up a full size counter here, risk-free. What I'm gonna get out of it, instead of taking a trade that would be 25% risk and get wiped out and targeting 25% reward, we could just be going for like a 4-5% risk, which is 5 times lesser, but extend that target to this, which is still the full 25, offering us this small counter for free. And I think that is something that could be worth the risk, because if it doesn't work out this way, we're only losing a fraction of what we're supposed to be losing on trade on this account. Again, this is playing the high risk one, and that would mean that this being breached again, this reinforces strongly this one, and therefore this has got a lot more potential, and I'm happy going with the 25% on this one, and I'm pretty sure we're recouping this small very easily right there. So I think it's a sound possible trade to do, and I'm just gonna set up a small penning there near the 0.2 area right there. 38. It's got a lot of confidence we are breaching past through. I'm gonna go with a smaller one, and I'm gonna try to get an aim to the top so that we can target this trade for free basically. So this is lesser risk, but with as much reward as we would take the full risk on basically. And I encourage you guys to try this out. Try runner size trade on ideas that you've got that could be working, but you're not too sure, you don't have enough confidence for it. That way, if it works, you work it out by taking the next trade that you wanted and planned for. So it's like moving pieces on a chessboard. We're playing to move ahead. So I want to take this short, really want, but it's sketchy at the minute, and I might have a way of taking this without actually taking risk, and this having such a smaller risk compared to a normal trade that it makes the whole thing playable. I don't know if it makes sense to you guys, but this is something we do a lot here, and it's really helping out and helping you out building confidence psychologically, makes things easier for you to go with a bit more aggressive play. And I think it's the same and sound things to be doing. So I'm gonna just do that, set up the level right there just above the 0.2, so I think I'm gonna go around this level 0.3 ish, knowing that we have 38 on site and everything, and I'm gonna cover the 61, and so we're looking at something like this. We're gonna go all the way up there, and the way we'll make it work is we're just gonna cover the 61, and that should be it. So you see, down of risk reward is crazy. That allow us to go with such a much smaller risk exposure, and it does make sense. It's not just dreaming. So we're gonna go for this setup and see if we get triggered first, and if it works out, and update you later, guys. We shall now see if, I don't think we'll get it by the end of the day, but I think we should be really comfortable seeing some further upside, and potentially next week having our short. Right now what we've done is that we've removed any risk exposure, and either our play work and we get that trade risk free, or we go back to where we were and we at least had a try that didn't cost us much. So we'll update next week to see what we get, and see if we either play this one for the Tuesday, Wednesday, or end of next week, or if we get this. But I see no further update on this pair in terms of technical analysis and on fundamentals. So I'm gonna let this unfold and see where we at, either on the weekend or next week. Alright, so normally Monday I would not go against momentum. We traded it appropriately with that 30 pips target, because as I said, Momentum Monday is usually one way and followed by some momentum on Tuesday, and therefore no reason for to be a full reversal. I would not go for a trade like this unless I've got a reason to go for that is extremely fundamentally driven or big alignment, or like a runner that would cover me for such a trade, which is the case for this specific trade. Therefore, it allowed me to go for this trade, and it paid out in the end. So next, we are likely to see further upside. As I was breaking down, we are seeing the break of this current channel, and we're gonna have to see now what are the next possible areas of interest. When it comes to potential zone of interest for a buy, I think they are pretty easy because a quick tip for you: when we use an area like this, the way I see it, if so for example, an area that's been over tested, if I tested it every single time, I keep doing so until I take the loss. If it's just one I took randomly, say for this example, I didn't take this one, I didn't take this one, didn't take this one, I took this one, but I didn't take any retest, and then I took it again, so I didn't take all of them. Can I go again? Is it part of my trading plan? So my trading plan says if we do make a new high, in this example there, maybe we've built enough buying momentum, and therefore if we were to see downside back to this, maybe that momentum from the buyer that push for the new high is still there, and they would have an interest in this area again, or for the first time. So therefore sorry, a new high is possibly for me a sign of having an interest on an area like this again, and as such we've made a new high. I would have a buying interest there, and I would have a buying interest there as well. So in terms of buy area from where we're at, it's pretty easy. I've got an interest on this and this. I possibly have an interest on the break retest of this SMA if we are to see bigger upside basically, but that is to be determined, because at the minute is not gonna be super strong enough for me to have my interest, especially since we breached through slightly before. So I guess the question now is what is the next level for possible sell? And so if you're looking at possible sell, so next zone of interest would be, so we've seen that 61 has delivered the pips, a bit of slippage twice, so to be expected. If you put it back all the way back down, I think 38 worked, 50 worked, so there's no reason for our 61 not to work. We have this, we've got a round number to cover. If you're looking quickly at it, there's some rejection around the area, not clean, but some rejection here. So the whole area is worthy of interest. Next one would be simply the top of this week and 167 round number again. These are my two next zone of interest. If we take a look at something like this, something I like to do, and we cross the top of this week, can't help to notice, but if we were to reach this area there, be only the second time if you get this main channel, we have the middle trend line around this area. It's looking very algo, so if we tap into this, I think there's potential for longer term downside, which I like, because it's making this trade very appealing. So let's say you cover the whole trend line, if it's now or later, you don't even need. If you go 0.8 or 60 round number, you cover the 0.2, and therefore you go all the way to 35, more than enough, something like this. And you end up with something where you'd be targeting the break retest area of this, basically making sure that you don't pass the 23 of the recent push. Recent push is something that is 38 driven, 38 double push. This is it. So something like it is very possible, because we've had those that have followed the 50 cal strategy. So my digital course that you can find online, guys, is the link in the description. So this is similar to what is the gold bullish pattern, the 3-phase one, 38, 38, 38, and as such, if you're looking at this, there could be the possibility, if we tap there, to possibly see the 38 at the 162 area and having last reaction. So if I'm showing you this, if we are to see that, possibly you'd see a reaction here, and possibly you would see these there getting toward this area, reinforcing the possibility. So this is something technical. It's called a 3-wave bullish pattern, and you could very much see this. So there's possibility of long-term downside on this possible trade. My next buy could probably be this one on the break retest, or this one, depending on which one, where we top it. But these two look very much appealing as it is for me at the moment. So we will catch up with GJ when we get near, or when we have reached one of our next zone of interest. So back on the screen, and today GJ has surprisingly been super bullish toward our 166 area. Trade has triggered and has already delivered. So typical things we've noticed throughout the challenge so far: Monday, Tuesday bullish, leading to some sort of reversal toward the end of the Tuesday London session. US opening that has again delivered the move, over 150 pips in the same session. Right now we have our runner in place and looking at the first counter. So obviously I did not expect this today. This is a crazy reversal momentum, and this is a sane counter to go for. However, this area seems now worthy of such counter. So if you're looking at the recent price action leading to this, we have the 38 area there. So if you're looking at this one, the 38 is within the 162. So there's two ways to go about this one. If you either you use this fib and you consider still valid, at which point sorry, this is the start of your zone with the last EMA, so the 200, or you consider this one there, or this, either one of the two, so possibly this one, to be fair. That's one I'll be using, and as such top of the move today, as such you'd make the zone the following one. Now it's a pretty big zone, there's a lot of confluences within. So to name a few: key level, EMA, 38, double 38, and as the backup we have this nice key level with high. It's for sure something I will have an interest on. Now I can't trade the whole thing with this, it's too big. Again, now you kind of get the idea the way I would personally trade this. I'll cover the whole thing, and I'll be most likely looking at something like this. So I haven't made my chart yet. This has just been ongoing, so I'm gonna have to refine the charts for the services on Telegram. I'm just giving you a rough idea of what I'll be looking at. So for me, something like this along those lines is something I certainly would have an interest in. So I'm gonna spend a bit more time to do the proper chart, but if we see side, ideally at the end of the week, toward Friday, I do have an interest in as early as 162.5 area, knowing that I've got an awful lot of confidence behind to back me up for some potential reverse, because this is very strong move to the downside, but it's even stronger reversal that we've had from this level. And as such, I feel like there's potentially some more movement that could occur. So if you remember what we talked about as well last time, we said if we were to reach this, you could possibly finalize that bullish pattern of our, which started with this, which is simply the triple 38, 38, 38, 38. So no doubt that we will reach 38. Whether we get a bounce from it and see the high again or further downside, I don't know. But that would complete bullish pattern the way we usually see them in gold. So it's very interesting to see one currently on GG. I never really fully noticed until today, but it seems to obey the same type of pattern that we do get a lot on gold. So this is the next buy. It's unlikely to be happening today, and this area is going to be my first counter. So the way I see it, possibly we use this as a counter area because it is a counter area. We treat it maybe like this, and if you get stopped, then there wouldn't be a need for a counter anymore, because this will be a trade with higher order of success that doesn't need that runner that will be then lost, and therefore it also makes sense. So we catch up near the price action. I'm just gonna do my full breakdown and update you guys. Alright guys, so this is now month 2 over. We've seen a strong reversal toward the end of the month on our technical level there, which I believe the end of the month helped us push through deeper into area. Unfortunately, on the very last day of the month, we didn't tag into our buy area, and we made the pullback we were looking at. So this is now for me not a trade I would go for. However, we still haven't tapped into these double EMAs, and what I'll be looking at is moving my zone across these two EMA. So what we do have now, which is what I had in the first place, is a big zone without the 38, and one is made up of these two confluences, and one is made up of the low there. So if you remove this one, that's it. So we do have something like this. Actually, I'm gonna get there. And as such, it's a big area to cover. However, right now we've locked in the short, we've locked in the buy, and we're in a very good position to, again, being more aggressive, trading everything we've got in between. Remember when I talked about wanted to break away from this area, We did break away. Now we look like we're coming back toward in this area. It'd be very difficult to find some relatively safe trade, but the good thing is that we've built up a runner from the top, we've built up a runner from the bottom, this one being significantly bigger. As we grew the accounts, we grew the trade and therefore the runner, and as such I'll be putting more emphasis on trying to find a counter buy rather than a counter short, because this one doesn't pay much. Thing with these runner, when you're locked in two ways like this, if I tap into this area there, I'm gonna have made a significant price move from the upper side, and I've already made a significant one from the lower side, which means that regardless of where we have, if I go toward that 61 fib, I will take a buy using this runner. Why? Because if it breaks, this one will be lost. And the same thing the other way around. If I end up there, okay, if I ever go back to the 61 area, I will take a counter trade there, because if we break 61, we will lose the runner, and therefore I'm gonna use these 61 as my last resort counter in order to avoid wasting a possible runner. So these are trade I'm gonna look for regardless of where we're going once we tap into this area. Now trying to build up a trading plan for the trading days coming, trading weeks coming. I'm gonna start with this area being my first counter. Then I'm gonna go onto this area being another counter. If any of these occur and do work, I'm gonna look at the price action leading to this zone to see if there is a possible counter short to add onto the downside, because at the minute the only trade possible I've got in between this short and this buy area, sorry, is locked in this range there. I've got nothing else. I will trade only in this range until we see some further price action, so development either to the upside or to the downside. Alternatively, if we don't go there and if we go up, the plan has already been made and hasn't changed. It stays the same, and it's these two zones. If we go further down and we breach past all of these, I think I'm going to regain interest in possibly possibly this price action here, possibly, depending on the price action leading to this. Indeed, I would need the price to smash through this to gain enough odd of success for it to be of interest, otherwise it's not. If it's closer to the trend line, yes, it will have naturally my interest. If it's not, then I will want to see some of it smash to build up more odd of confidence. And otherwise, I'm going to look at all these little wicks there for some possible buy area. But there's a lot more price action needed in order to gain interest on anything past this level, basically. And so this is it. So the month of Feb is now over, guys, and we're gonna take a look where we at with this small challenge. So basically we've added 6 trades to the month of Feb, which brings us to a total of 8 trades. So we've added the first counter trade there using the runner that we still have from this buy. It paid, so we have still got the main runner, and the counter was risk-free. Therefore, why it's a smaller addition. We move on to the next one, which was the nice short area we capitalized from. We try to keep a runner from it in case we see downside, and we lost it. Next trade is that short area based on the SMA. Unfortunately, we didn't leave enough room around this area, which we knew, we should have. Got greedy on this one and got slapped because of our greed. So a good reminder that the market decide what you have to do when you take a trade and how much you can take from it. So it had potential, but we just had to be giving it more room and therefore less greedy on the reward. So we got slapped for it, and that is a good reminder for us. We move on to the next one, which was the buy there. We built a small buy, pretty much like a runner, just in order to take a counter short risk-free, which we did, and we capitalized on it, and that was a risk-free trade, and then we capitalized on that small initial buy, riding the momentum to get to that trade, and finally to end with the big nice short on the top one around 166 area, duplicate of the trend line, and that was our last trade basically. So the challenge is going well. We've almost 7x the account in 2 months. Nothing majorly crazy, it's just 700% 2 months taking huge risk, so nothing silly like the 10,000% you could see elsewhere basically, but we are trading with a plan and a proper strategy, so we're not just diving onto a random trade with crazy risk. We're using high risk on calculated high odds of success trade, and we're gonna carry on to do so. So we will catch up on to the next month, and we'll do a sum up of the first quarter at the end of March. Catch you on the next video, guys.
Thanks for watching, guys. Don't forget to comment, like, and subscribe.